Hi everyone, it's Carlo and welcome back to CMC Markets Trend Tracker series. I'm recording this video before the crucial release of tonight's US non-farm payrolls data. Even so, it is worth examining the recent trends in some of the currency pairs and commodities. We've had some big moves. So let's jump straight in to the Australian dollar chart. And before I do jump straight in, December and January have been notorious months being less liquid. But even though they're less liquid, there's plenty of movement. And we have seen it already this week, and most likely that's going to continue in the weeks and months ahead. In the Australian dollar chart here right in front of me, the fundamental picture continues to dominate currency movements, particularly Aussie versus US. Now, the US dollar has weakened over the month of November and early December based on lower US yields, softer US economic growth, and the consensus view now is that the Federal Reserve has finished with hiking rates. In fact, there's about 150 basis points of rate cuts priced in for 2024. And that is what's pushed the Australian dollar higher as a result of all these factors. The Reserve Bank of Australia itself had a policy meeting during the week and they left rates unchanged, and consensus is building also that the Reserve Bank of Australia is done with rate hikes from here. So the Australian dollar technically on the day chart, you can see the Aussie retraced back to that key support level of 65.20 and bounced off it back to 66 cents. Now, a likely target we mentioned before is around that 68.90, 69 cents. That is quite possible to be achieved. We do need US equity markets to continue to rally strongly to see the Australian dollar push high towards those levels. Key issues look forward to from here when trading the Aussie is movements in US equity markets. If they continue to push higher, then it's most likely to continue to support the Australian dollar throughout December. And again, it is key. There's 150 basis points worth of rate cuts factored in for next year after tonight's US non-farm payrolls data and subsequent US economic data releases. Will the market undo some of those rate cuts already factored in for next year, or will there be more factored in? And they are the key issues look forward to look at in December and January when trading currencies, in particular the Aussie versus US. Let's jump into the US dollar versus yen. So as you may have noticed this chart here, last night, for example, we saw a 500-point drop in US dollar against the yen. Now, that is a huge move, huge drop, and the Japanese yen strengthened because of comments from the Bank of Japan Governor Ueda and Deputy Governor Himino, that they both hinted that negative rates may be closer to an end game than previously thought. So they still have the negative cash rate in Japan of minus 0.1%. The 10-year bond yield has increased towards that 1% mark. The Bank of Japan does have a meeting on the 19th of December. Will they be increasing interest rates for the first time since 2015 at that meeting? And remember, for those of you who've been trading for a while, back in 1989, the Bank of Japan increased interest rates on Christmas Day. Christmas Day is a Monday, so who knows? Surely they won't do that again on Christmas Day this year, but it's happened before. So those are the key issues to look at, but it's a big move here. You can see technically as well that we had the 20 and 50 EMAs cross over, death cross that's called. That's a potential bearish signal on the daily charts. And you can see the result of dollar yen collapsing 500 pips overnight. From here, focus on US economic data releases and the BOJ December 19th meeting. Next currency pair is the most actively traded euro-dollar exchange rate. And if you thought the US dollar was weak, well, take a look at the euro. The European economy in recession. We've had softer German factory orders and industrial production during the week as well. They continue to weigh on the euro. And consensus firmly now is the ECB is done with their rate hikes. And that's caused the German stock market, the DAX, to push and roar higher to make new yearly highs. What does that mean for currency traders who are trading euro-dollar? Well, both currencies are fairly soft, and both central banks are likely to cut rates next year, as has been priced in by the market. So therefore, we're most likely to be trading in a range here going forward in the euro dollar of 1.0620 to 110 from here. So a bit of broad sideways trading from here. Let's now take a look at gold. Gold has been very volatile this week, making new record highs of $2,148 an ounce as consensus builds that interest rates will be cut throughout 2024. As I mentioned, 150 basis points has already been factored in by the markets. That was one of the main reasons why gold jumped this week. Has come back off its highs pretty quickly towards $2,000 an ounce. So there's been a lot of trading in gold this week. Very volatile, as I mentioned. Liquidity might be a lot less in December and January, but the movements are still there. And for what to focus on when trading gold are US dollar currency movements, as well as whether the interest rate cut expectations next year are going to continue, or do they get pared back? And we will know that after the release of US non-farm payrolls tonight and subsequent releases of US data throughout December and January. So there you have it. That concludes my analysis today across some currency pairs and commodities. Thank you for watching, and I look forward to seeing you in the next video.